Hello and welcome to another update video about Ethereum. I wish you a great start to the week. We want to take a look at whether Ethereum has already put a low in place, or at least what we would need to see to confirm that. At the moment, Ethereum keeps, well, both scenarios, let's say, alive, which means short-term bullish, short-term bearish. We're still ranging, all right? And the levels in the range, they are defined. This is a sideways range. The first key invalidation point is here, as I said in the last video, the red line located at 2,150. That's the invalidation point for the directly bullish scenario as highlighted in white. Let me take you through this one first. In this scenario, a larger degree fourth wave bottomed on the 5th of August, and we could be on our way to all-time highs. In this scenario, we completed wave 1 of a diagonal pattern. That was the top in August. Wave 2 completed, forming a higher low. We could be in a third wave up. The third wave would be an ABC structure. I don't like the look of this, so the idea would be, okay, maybe this was the A wave. Somehow we're forming a B wave here, but that's really ambiguous. And then we could get a C wave from there. Then we need another 4-5 pattern, however, probably close to 3,500 to 3,600 USD. Yeah, so this is something that definitely we need to keep an eye on. And I mean, while this white B wave might go a little bit lower, it's absolutely possible a low is already in, and it doesn't look like it. But as I said, the microstructure is a bit ambiguous, so it really is tricky. It's really difficult to determine what exactly it is, because it's all corrective structures. So it might be morphing into something more complex, for example. Just be aware of it. And the white wave 2 invalidation point should be clear. So that means below that level, it is more clearly the yellow count. What do we need to see to confirm the white count further? Well, I would want to see, first of all, a break above resistance at 2,696. This would be the first indication that we're following a more directly bullish scenario as per the white wave count. Why is that? Because, if we are going higher from here, it shouldn't really be a corrective rally, shouldn't ideally go above that level. I might change that resistance area a little bit going forward, but for now I leave it where it is. And I want to see, ideally, so obviously wave C is a 5-wave move, right? So I want to see 5 waves in wave 1, then I want to see a higher low. And if that higher low holds, it could be the internal wave 2 of that wave C, and that would be a possible setup, especially if wave 1 is a 5-wave move. So that would be ideal. 5 waves above resistance followed by a 3-wave pullback would be a setup for a third wave in the C wave. So, but overall now, I mean, it's not doing much. We've just moved from support again into resistance, or towards resistance. And this could actually be a wave 2 corrective rally in wave C to the downside. But it's not a high probability scenario. It's a bit, it's just a potential. Because I tried to explain to you my latest view of the microstructures as well. That takes us to the yellow count. So, oh, by the way, what happens if we break above the Friday swing high at 5,000? 2,000. 5,000 would be nice. 2,561. It would probably simply be a reset of the B wave. Then we have A wave down, right? Do a larger B wave, which is why the resistance area is a little higher. And then we could come down in wave C. So this would be just a shift in microstructure, really. Nothing that would change anything. So, and then looking at the yellow count, that's bearish, short term, but overall also still bullish, because we could move to all-time highs afterwards as long as we're holding 1,800. Below 1,800, we have to start to assume the bear market never finished, as I explained in some of the previous updates. In this yellow count, we are forming a B wave here. So A wave bottomed on the 5th of August. This here is some kind of a B wave. There are many ways how this could unfold. And then a C wave down, yeah, like that. And it would be a 5-wave move down in wave C. And we would need a break below the red line at 2,152 roughly to confirm that further. It's just that, yeah, it's important to be aware of it. But we're only ranging at the moment. I mean, you know, the market hasn't committed and hasn't been committing. And I've been telling you for a few weeks now that the microstructure is pretty messy, and really, it hasn't really done anything. It's just been extending the range, so sideways action, which brings the time element in. You can't really say how long something takes, right? But I'd say there's a good chance we continue to move in this sideways range until the US elections are over. We'll see. Levels should all be clear, and also should be clear that I still follow an overall, let's say, bullish scenario. But as I said, you know, the microstructures, you know, if you went away like early in September and you came back now, nothing, you didn't miss a thing. So that's how messy this is, you know. And sideways action doesn't lead to progress in the chart. It's just a correction. So anyway, that's the update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.